Signals in the deep, markets never sleep. Whales move silent, but we speak. On-chain truth, no disguise. This is Leviathan, open your eyes.
GM fam, today is Friday 19th, December 2025. Second to last Friday, I believe, maybe third to last Friday in all of December. So get your tax loss harvesting in now. But don't do it while you're watching this live stream, because I want you to focus all of your attention, because we're about to have a blast of a llama party here. We have got just a few weeks left in the end of the year, and we want this week to be the best llama party we've ever had. So we're going to need all of you to put on your party shoes and really prepare for a good time, because we have none other than RAAC, which used to stand for Regnum Aurum, but now stands for Real... I wrote this down so I get this right. The Real Asset Acquisition Company. Here to talk about all that with everything that entails is MD. Maybe K Crusher is going to be joining us at some point, but for the time being, MD. How are you doing, sir?
Solid, man. How are you? Thanks for hosting us.
I'm so good. So glad to have you guys here. So glad that your launch has been super successful so far. I've been following along. You mentioned on the stream that you're about 30% through the way to your minting of PMUSD. Why don't you tell us a bit about how the launch is going, as well as a bit of a background on what is RAAC for those who might not be familiar?
Yeah, again, thanks. So a little bit of background. So RAAC is like an infrastructure layer on top of Curve Finance. That's kind of like the high level. There's like four tenets or four pillars of CurveCap that we kind of use as our quote unquote North Stars. So one is, as you imagine, borrowing and lending is a big business in open finance and in DeFi. So we want to participate in that. So we built like a borrowing and lending application. It'll be rolled out in the coming weeks and such. That leads to looking at the collateral that's done in borrowing and lending. So again, as you are well aware, most of that collateral is risk-based, like whitelisted wrapped Bitcoin or Ethereum, right? And there's we think there's huge advantage to insert like more stable uncorrelated collateral types like gold and real estate. Those are the two assets that RAAC is going to look at onboarding to kind of distribute that collateral type. The third pillar, which is exciting because the first kind of business is the borrowing and lending, but the second business is liquidity. So we're trying to help the liquidity demand in open finance DeFi, because it's needed everywhere. If you peek into traditional finance, liquidity is always required. Private credit's growing at one of the fastest rates, which is an indication that it's hard to borrow. And in open finance and DeFi, it's always needed. And you just have to look at like the distribution of risk to stables, and it's pretty lopsided. I mean, I think our stable supply is like 300 billion. And I think yesterday we were around, I think we dipped under 3 trillion, but we might be 3 trillion total market cap. So it's kind of 90-10. So we want to build and participate in the stable token kind of business. So we have PMUSD, which is created off of a real world asset, a gold asset. That's the backing. And then finally, the last pillar, which is really the exciting one, is the reward layer that comes with RAAC and the ecosystem that we're playing into, like the Curve Finance Convex ecosystem and all the other players like the FX folks and the Frax folks. And shout out to the FX team. They're just a bunch of gigabrains that are just great folks to interact. And if you haven't learned about their protocols, please go check them out. They've created some incredible technology and solutions for participants in open finance. So yeah, that's kind of the four. So today's it's ongoing. This our first tranche, $1 million in size of PMUSD. So we're, like you said, we're about 30% through. It was launched yesterday, about 10 a.m. New York time. So yeah, I don't know. I hope that gives you a high level.
No, that's super cool. And just to dive in the details of it, so anyone who's listening might be interested, this is basically with this 1 million PMUSD, as you mentioned, it's backed by gold. It's a stable coin. And for every dollar that you deposit, then after the lockup period, you get $1.05 PMUSD. What's that lockup period?
60 days.
60 days. So a 5% return in 60 days, backed by gold. So fairly safe. I'm of course, like everything's risky in DeFi. So DYOR, do your own research. But as for yield farmers out there, that's a pretty good deal. 5% in just 60 days.
Yeah, we think it's pretty attractive. And it's just the beginning because we have a good amount of supply to work through. So there's more opportunities that we're going to have to kind of release it into circulation. That's the whole idea.
But at the moment, it's exclusive just to the RAAC bots holders, holders of the Llama
The RAAC
NFT.
bots.
The
Yeah,
RAAC bots?
RAAC has an NFT collection, and of course we modeled it off of a lot of the Llama collection. So the Llama holders, as you can see, I'm a Llama, and I know you are too. And shout out to that community. Just great community, great builders, and so and they have a great model. They launched with limited supply, so RAAC bots only has 1,111 RAAC bots, and so that community gets access. The Llama community gets access, and then we're using 8Bond for the initial $1 million tranche. So I think there's a top tier community gets access to, and that runs until the 22nd.
Excellent. And then, just wanted to give a note to anyone who is listening to this that, Llama parties are like wide open. So anyone who wants to come join the party is welcome to. So this is not that you are joining the Llama party because of any special treatment, but you did have favorable and special treatment throughout the Leviathan ecosystem this past week because you won the Squid Pass. The Squid Pass is managed by auction each week. And if you can forgive the typo on the dates, there's a current ongoing Squid Pass auction right now. So if you would like to have the pinned post on X, the pinned post on Telegram, the QR code in that upper left-hand corner, as well as featured placement on the website, you can head to leviathannews.xyz/auctions, and this auction is going to expire in just 17 minutes. This could be our first auction, given that it's going to be running over the fairly slow Christmas week with no bidders. So if there's no bidders, just fair warning, like Leviathan's going to reclaim that auction inventory for ourselves. I already know what I'm hoping to post in it, but you still have 17 minutes, and the auction's on mainnet, so you don't even need to bridge any funds. So just wanted to give a quick shout out to that. We'll be keeping an eye on that as the show goes on. Excellent stuff. Anything else that you'd like to talk about as far as the RAAC launch that has not been covered? Of course, we're following all the questions and comments. So if anyone's got questions in the chat, feel free to drop them in here.
No, I think we covered it. Yeah, we think we covered it. And thanks for the folks that have participated. And yeah, if anyone wants to participate, then head over to 8Bond and do your deposit.
I think I might do so. Of course, not while we're on the show here. So we'll see about after. But it seems like a good deal. And when the liquidity for this would be in, there's going to be a PMUSD curve pool with Curve USD, or what's the
Correct.
tie-in with Curve?
Yeah. Curve USD and PMUSD. Yep. And Frax USD and PMUSD. And then we'll be building those out. And then we hope to onboard some other partners too. So
Excellent. So, and then the peg mechanism with that is it's just kind of sort of like you put up gold as
No,
collateral. to
no,
mint?
no. We actually went and found like best practices. So our friends at FX V1 is what we're using to mint the stable. So we know that that system's it's been operating, and I mean it had at one point like over 100 million in FX USD supply coming off of it. But I know they've moved to their V2. But yeah, that's the design and that's the system that governs the PM USD.
Excellent. So, I mean, like as far as I'm concerned, like that kind of answers a lot of my questions. So, again, not financial advice, but it seems like a good bet to me.
Thank you. We do too. It's a stable.
Absolutely. But in these chaotic times, what's better than staying stable?
Yeah, and that's kind of like the idea of having different types of collateral. I mean, look, there's this whole I don't know if you've been reading, but this 10 o'clock pump or dump that happens over the last month around 9 or 10 in the morning. Chaos
That would
happens.
be like right now, actually. I
Yeah.
haven't. I've been without internet for most of the past week, so I'm super far behind. I'm hoping you can educate me on all the crypto news as we get
Well,
into the
I mean,
headlines.
there's a bunch of. I mean, it's visible. You can see it. What's causing it? Who knows? I mean, it definitely plays to thin liquidity because you're getting some pretty big moves. You can't discount the intertwined nature of traditional finance now with the whole structured products that are built off of like the king assets in decentralized finance like Bitcoin and Ethereum, right? And even other it's moved on to other assets too. So you got to wonder how much of a play that there is there. But then the other weird conspiracy X theory that I don't know I've been seeing floating around is like these high frequency traders are starting to want to play the game, right? And so again, I think it speaks to liquidity, and I'm sure you've been reading, but like not volumes, but actual holdings of these king assets are low on like centralized exchanges. So potentially you could have an extra kicker of volatility. It's certainly been evident. But the
I
macro
completely.
trends are still there. Like there's been a ton of talk about tokenization, a ton of talk of stable token. Like it's almost like I don't know if you know Kirkap, but we run a quiz in the RAAC community every week based on your news stories that come off of Leviathan News, just to
Oh yeah.
keep people up to date and educate folks on what's going on. And it's amazing how many stories are about stable tokens and how many stories about real world assets and how many stories are about tokenization. And there's so many participants and projects, good projects out there that are trying to expand this or build off of it, right? So I think it's like
Oh, I mean,
it's
it's almost
definitely.
like
Go ahead.
I was gonna say it's almost like an embarrassment of riches in terms of like the good news that's been coming out for DeFi. Like any one of these stories would have been like catalyst for a whole new, like week of excitement back in 2020. And nowadays we're getting announcements like this every hour, and the price just goes down, down, down. But for my sake, I think I'd say the jury's still out because I'd like to see what happens when we get aggressive rate cuts, which was kind of the original thing that got DeFi on the map, was when the zero interest environment where could you get yield, and DeFi
Yeah.
was offering some pretty crazy yield. So until I see what happens when we get rates cut down to like bare minimum levels, like I'm not willing to say that DeFi is like dead or anything like that just yet.
No, I'm kind of like half glass full, to tell you the truth, because if yields are going down, that means that the spreads are going to they're going to get wider because like this is a new industry. And so if you look at like traditional risk profiling, you should be paid for the risk that you're taking. And we're building something new. I mean, the total market cap of financial assets is insane, and we're at 3 trillion. So like stable tokens could go giga. Like again, I'm not pontificating, but I'm pretty optimistic. If you just take a balance, like 3 trillion, I mean, you should have at least half of it should be stable. Why not? Why? Nowhere else in the world is that asymmetrical like that. So it doesn't make sense, but maybe it's because it's the beginning. Like we're building something new. So, and you should expect to be paid more. Like you should, because like you look at risk-free rates, again, in the US, 10 years, like hovering around 412. So that's your, quote unquote risk-free rate, whatever that means in this day and age, right? So, but that's the base rate. So how are you competing? I mean, if you look at ETH staking rates, they're probably like in the threes, right? Like maybe tough to
Give or
sometimes
take, yeah.
find four, but yeah, so that tends to be like DeFi's like risk-free rate in a sense, if it's kind of been adopted and everything's kind of benched off that. So if you're getting a stable at 10 or 9, because there are some solid projects out there that are doing that, so like you're like 500 basis points above. And then curve cap, like I don't know if you track like money market, like traditional money market balances, like it's at the highest it's ever been. And we never can imagine that that's all going to move, because it's not. It's been for the whole time, like the whole 27 years I've been in finance, it's always been a massive pool because it doesn't move. But it's way higher than it normally. It's like 7.3 trillion, I think was the last number, and it's a lot of trillions. And that's all like that's debt. So it's like anytime debt is issued, then you think about it, it's potentially collateral for a stable, because if Circle's buying treasuries and Tether's buying treasuries, then that's debt. So more debt means more capacity for stables.
Oh yeah, and definitely stablecoin is one of the sectors I am just like extremely bullish on. So, but that's just
Yeah, it just makes sense of like maturity in the market. Like we all want that. We want this to grow, and the risk assets have done a massive lift. They've got us to 3 trillion. So yeah.
pretty crazy stuff. Pretty crazy stuff. I wanted to go through some of the recent headlines from the past week and get your thoughts on them. Because as I mentioned, like I've been, bad storms where I live, so like I've been without internet for a bit and haven't been able to catch up with everything. So, courtesy of the website, the top story of the past week was this interesting one from before the power went out. For me, where this is scooped by Danik Jade 4 days ago. Curve Finance founder Michael Egorov has proposed a 6.6 million Curve grant with 17.45 million CRV to fund the long-term ecosystem development. The funds will go to Swiss Stake AG to support its 2026 roadmap, including Llama Land upgrades, infrastructure, security, and continued R&D, with biannual transparency reports and open source commitments. And then I did some numbers on this to note that if the proposal passed, this would take the Curve Community Fund from about 24.5 million CRV down to 7 million. But it was not the end of the story. So a few days later, the Convex, the way that the Curve voting works is that the Curve goes, puts the vote up, and then it goes to Convex has to vote fairly quickly because Convex, of course, is like a massive stake of Curve. Convex voters came in and overwhelmingly slapped down the proposal. So I'm going to try and pull that up because it was pretty entertaining. Generally, Convex votes get like, between 10 to 20 votes. This one came back with 54 votes. And it was very heavy, except for StakeDAO and Clever, which came in favor of it. Let me get the squid pass out of the way for a second. There was just overwhelmingly 74% came out against to 26% in favor. There was a lot of the comments basically centered around this concept that like there should be more discussion. We should have a bit more time to talk about it. And then also like people commenting that there's not a lot of motive torque on sustainable funding solutions. So basically, upshot of this is that there was essentially like a new proposal that was posted just last night, I believe, which was kind of reducing this to about 6 months in funding instead of the full 12. And then just to get into some of the weeds on this, this is not actually like kind of a direct lump sum transfer, but it's like this like gradual streaming, which the DAO can vote to curtail at any point. So if there was things that, and actually Clever was actually split. So coming through in the comments. So it was not just all yes, but it was part yes, part no. Anyway, well, yeah, what do you make of the situation? Have you been following this, MD?
A little bit. I mean, I find it ironic that they're asking right when curves like the price is destroyed. So it's like if it depends on what side you use. Like if you're using the nominal amount, so hey, I want $5 million worth of X, which is fine because these guys do great work, but that takes a lot of tokens, because if the price is destroyed, then you're eating a lot of the tokens. So I mean, if you would have done it when it was like 1, then they get the same nominal amount, but they get less curve tokens. So I think the timing's a little bit like disadvantaged to the curve DAO in a sense, because now they're releasing this whole sloth of tokens, and I have no view on the initiatives in the sense of how it gets allocated and stuff. But it's interesting about, like, I feel like it's at a disadvantage to the curve DAO from a timing perspective. So it's almost like, could you put like I don't know, like when it hits a certain price, then maybe you release it or something. Because it'd be a tragedy to have released that many tokens now at 34 cents, right?
Yeah, although it would be, as I mentioned, like not an instant release. It would be streamed over the course of the term. So it would not just be like
Sure.
all 17 million hitting the market and getting instant dump.
Sure. But yeah, no, I think someone mentioned about like rev share or initiative. Like, I thought there was some comments that were very intelligent that way. I think it was from one of our Llama community members, but I can't recall who it was.
So I think the question with the rev share is, if you are basically taking revenues away, doesn't that end up hurting the protocols like Convex and StakeDAO that are like getting a piece of those revenues?
Fair, but then I mean, the idea is that this produces productive, like, solutions, right? That helps everybody in the end. So if it's productive, I think you, like meritocracy wise, you could be rewarded for that. So I don't know if that answers your question, Curve Cap.
No, I mean it's kind of an interesting, very interesting discussion. Robo Odin is in the comments pointing out that there's a downside to the 6-month plan, and that it's a self audit. So it's like, as we see that the community was like pretty sharply negative on some aspects of this, and then part of it being like questions of transparency. So if the the same organization that is requesting it is also asking for the money, you can see that. I know a lot about this, but I don't know there's certain things. So like I understand that there's like some urgency that this has to be done before the end of the year, but I've yet to learn the exact reason why it has to be done before the end of the year. So I do understand that there is some urgency for some reason to get this through, which is why it was kind of pushed through in this closing month to the year. But I don't actually know the full like reasons behind that.
Yeah, you could stake the whole amount and then just stream the bribes every 2 weeks.
It would make sense. I mean, that would certainly make sense. But like, I understand that like there is.
Well,
like,
I'm biased because I always look at the curve and convex. Like it's a production token. Like in a sense, like there's like duality to it. If you're a protocol, you can use it to help your liquidity. But if you're a participant, you could just use it for earnings incentive rewards every 2 weeks. So, and again, even with depressed markets, those are still attractive handles. Like I think I was talking with our colleagues, like between the wrappers and some auto compounders, like it's still ranging curve cap from like 14 to 19%.
Yeah, honestly, like
And that's a
like
and that's a
I'm
lot.
not.
Like 19% on million notional, and that's 190K. That's just
I
on a
mean,
mill. So
I know that I have a different time preference than a lot of people, but I
sure.
have like kind of no like complaints about the. I'll just pull up the chart of the curve peg, which has been. Okay, so here's all these like curve wars. This coming from DeFi Wars.xyz, and we could see that like for the most part, like all the curve wrappers were like super pegged, and then almost a year ago, just a bit over a year ago, was when like supposedly the bull market was going to start. This was when we all got excited because regulatory changes were going to come in, and one of the immediate effects was it just plummeted all the pegs. So convex curve is down around like 45% today. Stake DAO's SD curve is at 65. Y curve is at 63%. So like from the point of view of like all these like curve wrappers holding their peg, it's been a bloody year. The year spent entirely underwater. But for my sake, like I got a long time preference on this, so I have no
Mhm.
like issue just kind of holding onto these wrappers and getting the incremental revenues from it, and I'm quite happy. Like I'm eating good.
Mhm. Yeah, and again, we at RAAC, we're gonna have a wrapper also. Um,
Perf?
for RAAC.
Oh, okay. Wrapped
Yeah,
rack.
yeah, it's gonna be called Le RAAC.
Le rack. It's French.
um, but wrappers should trade at a discount, like in theory, because
Agreed.
you're
Yeah.
trading you're trading a time for liquidity. And when you do that, there has to be a discount because you're getting this liquidity optionality. Because normally you have to hold and lock.
Agreed.
So the lock time. This could all function like a bond, right? Like the lock time is the time of your bond. The coupon is the yield that you're earning for that lock time. So if you have those two, you can present value your asset because you have the metrics. So what the discount is, though, curve cap, that's what the market puts on, right? I mean, we've looked at this a lot, or I have, and so has Crusher, because it's really important because we're going to be in, like RAAC's going to have productive treasury assets to participate in this curve wars. Because again, we're going to have pools and we're going to want to direct emissions to those pools. So there's incentive to use your voting power for your liquidity, right? And so, yeah, I think there's some features out there that really like shows why one wrapper is trading at a larger discount than others, right? So, and I
Yeah.
agree with
So
you.
some
You still have an opportunity because, like, if you take, um, like, keep the range 14 to 19, um, so you can sit and wait and earn. And Rule of 72 says you divide 72 by 14. That tells you how many years it takes for your money to double. So, and then you have a free call option built in because if curve goes up or if the discount compresses, um, you've been paid. So I
Right.
don't know.
Right.
It seems like a interesting risk reward proposition.
So on that level, would you actually say that like the period where all these tokens were pegged was almost more of like the market being irrational, and now the market's
Yeah,
fairly priced?
theoretically, because I don't see how you can have a discount for time, for like liquidity. You're not. It's not. It's kind of like it's a component that's not being properly valued, or it's being overpriced. And I'm not submitting that whatever that number is, but if it would be like a bonds trading at a premium, right? But maybe the handle from that bond is so high that it deserves to trade. Like some of these wrappers that are at peg, their yields are really high, like 25, 30. So the demand to get that handle, the 30 handle, I mean, supply and demand, right? So more buy than sell pushes you up.
Yeah, to some extent, I see this almost as analogous to. Do you remember the situation with USD and USD 0++ from Usual Money, where
Yeah,
first few like week or
yeah.
two was trading exactly at
Mm-hmm.
par, and then people realized that actually a bond and there should
Yeah,
be a discount, and then
yeah.
since then it's been like you can see on the chart here, like
Yep.
just kind of drop precipitously.
Yeah, you recalibrated the formulas, right?
Hmm.
So you got your price. So it was more of a market identification of what was the reality. Sometimes folks, as we say, they ape in, right?
Well, it's just interesting to me
Maybe.
because like I always like look at crypto in terms of like the efficient market hypothesis, which is essentially that like obviously there are many times where markets are completely wrong, but it's still like the market still presents kind of the best way to gather all the information, and eventually over time the markets kind of become efficient as the wrong markets get arbitraged. um, so it's just very
That's so
interesting to me because
fascinating.
DeFi is such a like colossally like huge space where it's impossible to have perfect information as all these millions of tokens get launched. So it's just like rife with information asymmetry.
Absolutely. We were in fact talking about that yesterday. That like the efficient market hypothesis is like suboptimal as an overlay onto decentralized finance because there's so much asymmetrical information. Like if you
But
even you think about like Markowitz's efficient market hypothesis came from traditional finance fundamentals. So you're able to, through regulatory filings, like the market tends to square itself out, and that's why bonds are the eyes into the future. If you pay attention to yields, and that dictates like equity risk premiums and stuff, right? So yeah, I think people are trying to overlay a lot of these financial principles into open finance, but I still think how early like the system is still. Um, I mean, 2020 was DeFi summer, so we're 5 years old, really, in this whole financial experiment. So it's not really that much time, and just the nature of the technology curve cap, like you just don't know who's playing where. It's why it's called open finance in a sense. So
yeah,
so yeah, no, I think um, yeah, there's definitely you can't say that exists here, in my opinion. So I'm with you. I support your thesis there, sir.
well, it's just interesting, especially as we see the launch of like all these prediction markets, where with the amount of prediction markets that are getting launched, there's going to be way more markets than there can be liquidity. So as like the liquidity thins up, we're going to start to see these prediction markets like have massive like let's just say like inaccuracies in terms of their ability to actually be trustworthy as a forecasting tool. But it's still
Actually, I'm gonna cordially say, like, to just challenge that a little bit. So,
Please do.
well, here's the thing: like, if we're trying to get to this efficient market state, then more information will help actually refine that and get the price activity and price action, price discovery, like tighter, more
I
representative.
definitely agree with that. I think
And one example of that, I mean, RAAC was lucky enough to participate in Chainlink's build program, and there's a fellow partner build program called Trueflation. And it's really fascinating what these dudes are doing, or dudettes. But they got onto the Bloomberg terminal curve cap. That's big shit, man. Because now anybody who has terminal, which is, you'll know I have, when I make it, when I have terminals sitting on my desk, man, for sure. Anyway, sidebar. But no, they have like 900 like decentralized data points coming in to represent the, what is inflation in a sense, hence their name, Trueflation. So, yeah, I think there's a lot of opportunity for the prediction market to help in that kind of refinement. And it seems like an unstoppable meta, really, because it's like the technology's unraveling, right?
Yeah, I definitely don't disagree with anything you said. I think that the more information, more data points is definitely better for things. I just think my contention is going to be that there's going to reach a point where prediction markets become so oversaturated that there will be some prediction markets that just don't have liquidity. So if there's like one person buying yes and that's it, you won't get a lot of information from that market because there's just not enough people willing to trade that market versus others. But we'll see. Leviathan's
hey man, that's kind of like the basis of statistics. You can't have a statistically significant representation until you have a certain amount of data points. So for sure, you wouldn't carry too much weight on any one. But on the other hand, like, there's been some pretty good examples of how the masses have called it right, in a sense, right? And that's kind of counterintuitive to what normally happens. Like, usually the herd gets slaughtered, in a sense. Like right now, like there's a huge debate. I'm sure you imagine just the valuations of all this. I mean, you've had the talk about it in previous shows, like the AI spend, right? Like, there's a lot of debate. Like, geeking out for a second, Oracle, so the database company, they have like a credit derivative that trades because they're going to have to raise a lot of debt to do this build out, this infrastructure build out. And so they went to the market, but you should see the action on that CDS right now. It's getting destroyed because there's a lot of doubt that these guys are going to be able to do this, right? Or pull it off. And they've pulled a ton from the future. Like, they've gone to like 2030 curve cap. Like, anyways, we digressed a little.
No, it actually brings up a story that it didn't make the Leviathan top 5 for the week, but I still wanted to talk about it because it made my top 5 in my heart. This was like a phenomenal story. This came via Johnny Online. Actually, I posted it, but it's the source from Johnny Online. And this was Claude, which is Anthropic's AI.
Sure.
And your story about when you made it is when you have a terminal from Bloomberg. My story of when I made it is I'm just like happy to disclose to the audience that I just decided to bite the bullet and pay for Claude Code Max because I've been spending like the last couple of weeks trying to like futz around with other solutions. Like, I tried Gemini, I tried Codex from ChatGPT, I tried plugging Claude Code into DeepSeek, and all of them were like various levels of satisfactory. But oh my gosh, Claude Code is AGI, in my opinion. Claude Code is artificial general intelligence. It's so good. And part of the evidence of this is that fuzzing is one of the more like complicated tasks in crypto security.
Mm-hmm.
And Johnny Online was able to, let me just go through and click on this because this is such a wild story. Johnny Online was able to use Claude to actually like one-shot a perfect Foundry fuzz test that uncovered an edge case that an entire massive test suite missed. So we're actually at the point where like you need to be using AI to fuzz your code, because certainly if you don't and you deploy this stuff, the bad guys will.
I know.
And AIs can do it now, which is wild.
I know. Yeah, and the wild thing is that these, I don't know, black hats, I guess, they only need one hit, and everyone has to be 99% up. So it's wild. It is.
And yeah, we talked about it a few weeks ago. Johnny came and joined us, as did Asun, to have kind of a developer chat about this. And on one hand, they're like super optimistic. Like they basically said, like, this is great because we're going to have all these new tools, like this evidence of using Claude to like successfully fuzz. That's a power that the good guys now have. It's also a power the bad guys have. So basically, it's like we're still going to see the same classic battle between good guys and bad guys. Completely changed playing field, but the saying goes, war never changes.
Yeah, well said.
So we're just basically stepping into like a brand new battle. And we also saw it with Yearn this past week. Let me get this one up, because poor Yearn, like,
I know that old contract with 300K in it.
Yeah, and like
5 years
this is
ago.
obviously like. Yeah, this is obviously like kind of like exploiting like I don't know, like an antique store or something like that. Or I guess that's like not even a good analogy, because antiques have probably more value than this
storage locker. Someone just broke an old storage locker.
Yeah, except it was like a storage locker with a rusty padlock.
Exactly.
And there's nothing in there but a few like old like rusty shovels. But yeah, it's still like pretty wild to me to see like just kind of intern all these, as Hades said, not Yearn finance, it's exploit finance. All these like old contracts are going through and getting like broken. And like my fear is that this is just like the AI people are like just tuning their AI tools on these things and like going from the simplest, oldest to like the more modern. So I'm worried that like as like they throw more compute at it, we're going to start to see like all of the more modern like stuff being released now start to tumble. So why don't you take a second just to talk about the security that our RAAC has used with your launch?
Yeah, we've that's been a big part of our journey too. Pajov audits is really helping us a lot. We've done 3 audits. And we have even some security researchers on our team too. So absolutely, we were doing all that we can to make sure that, and that's kind of like even with the selection of some of our like the forks that we've done, due diligence was done on those too. So, but absolutely, Jared, this is a really big and important space. I think like one of the best services is those SEAL dudes that are out there, seal.org.
Oh,
what a service, man. Yeah, those guys are definitely incredible.
I mean, to some extent, I actually like worry less about this with RWA type protocols, because it's like no one would care if Circle's USD. Some people would care if Circle's USDC got hacked, but Circle would still have the money sitting in the bank account, right? So they will freeze all the USDC in existence, and everyone like they'll have like some kind of redemption process, and it'll be messy and all that, but like at least like the assets are in the bank. So that brings me to the second biggest story of the past week, according to the Leviathan News algorithm, which I want to get your opinion on because it kind of touches on RWAs in a way. This is just a fun one. Crypto elites are shifting from NFTs to ultra-rare physical assets as Wintermute's Johan Turpin and others acquire a 69 million-year-old dinosaur fossil. signaling changing tastes amid NFT market decline. Spencer 420 adds some context that when Bloomberg's Suvashri Ghosh visited the vault with Turpin and co-owners, including collectibles entrepreneur Che Wei-Yang, the dinosaur wasn't the only surprise. The halls were lined with tokenized gold bars, fine art, rare wine, and hard drives holding hundreds of millions of digital assets, a real-world archive of crypto wealth that spilled far beyond the blockchain, per the report. Turpin told media that the splurge was partly passion, partly prestige, echoing a trend that has swept through the upper tiers of the industry. I bring this up for several reasons, one of which is, the gold bars, so like maybe they can get some rock in there. But like mostly just to get your take on this, because this is on some level like arguably like could this become the new NFT trend where people are doing like RWA collectibles on chain, off chain, both? Like I don't know, like what what does this mean for?
Well, first is, I mean, this is just the dude's lucky and has so much optionality and choice. So God bless him for being able to buy a dinosaur. That'd be pretty cool. I really think the NFT container, like the speed of transfer of value transfer, art meshing in with the technology is an example of why, like, of some of the things that he has alongside this this asset. So I think it demonstrates that it's almost like the tech is there. It's just people are sorting out the use case utility for it, but it speaks to tokenization because again, it's like the speed of transfer and the speed that the tech brings. It's almost like it's converging because it's there and it's more optimizing and efficient. So naturally, the system, it's like water finds its way in the shortest path. Money finds its best yield. So optimization finds its way in. And if they're assets, they're assets. And the tech can make it better.
Well put.
I don't know.
Well put. Right.
That's my take.
Sure.
I mean that we launched a NFT, to, almost to make them great again in a sense. And our community, the llamas, they have a functioning treasury. Like it's an asset producing. I look at it as like a new age bond in a way, the NFT, because you can attach an art component to it, but you can also like. There's a financial aspect that can be utilized too. So I'm a big fan.
Yeah, my hunch is NFTs will make a comeback at some point. I don't know where, I don't know when, but I think that
Well, didn't the punks go through like a bit of a run like 2 months ago when the markets were a bit healthier? I think in the summer.
looking like we might have a bull market. Yeah, I think they did. So I think it's just we for whatever reason like there is no bull run within like the altcoin space that we live in at the moment. Again, I'm holding out judgment to see like what happens if we do get something like rate cuts, but I don't know. I did want to get your thoughts on this one because there has been like a lot of action in terms of like the we talked about like the favorable regulatory environment for all the crypto stuff. What do you think about Caroline Ellison quietly getting moved out of prison?
Oh, I didn't catch that one at all.
That one really slipped in under the radar. I was really surprised to see this one.
Yeah, I got.
This is the top comment there was basically asking like when are we going to see CEO FTX Sam Bankman-Fried quietly be moved out of the prison. Because I think that there's like a lot of speculation that might happen. He's trying to angle for a pardon, And it seems like there's kind of a lot of pardons being like thrown about. There's just another story about pardons as well, which is that Trump is looking at a potential pardon for the Samurai Wallet developer Keon Rodriguez, who was sentenced to 5 years for building a Bitcoin privacy tool. So
I thought you were going to bring up the Do Kwon dude. He got
that's on there too.
Yeah, 15 years. Yeah, I don't know. But
yeah, so that was actually the second story of the past week, which was this one, which is victims detailing suicides, bankruptcies, and ruined families from Terra's $40 billion collapse. And the judge said that their letters were impactful before delivering the 15-year sentence of Do Kwon. So a lot of stuff going on in the kind of, let's say, legal slash pardon slash space. Let's see. Is there any other stories that I wanted to get your opinion on? Let's see.
yen's getting smashed.
Oh yeah.
Yeah. Oh yeah. I think the Bank of Japan raised interest rates. Like I think their 30-year bonds at the highest it's been in like 30 years. And there's always action with the funny money. I mean, that's one area, a curve cap. I know you've touched on the past, like Forex, foreign exchange, like playing a role like in decentralized finance. Like really see that also as a big opportunity. Because if you put that into the stable token, holy cow. So now that massive stable token supply, it doesn't just have to be USD. It can be JPY, Euro. And there's a diversification benefits having different currencies because they zigzag differently. Like this year, Euro's done well against the USD. And so, I mean, I think the best trade was buying gold in yen. So
Yeah. I mean, obviously, the curve is moving very heavily to take advantage of the potential for Forex.
yeah,
This is the new FX swap pools that are powering things like Frankencoin amongst several other pools.
yeah,
Where basically they're pools that are like super optimized for trading of certain types of assets. And it has a kind of a different system where you refuel the pool by essentially giving it money when it's kind of getting out of balance in one direction or the other. And the upshot is these kind of like superlative trading fees that you see, such as from like yield basis. You know, you see like consistently super high trading fees are accruing to yield basis pools because of it. But then the question, so obviously these FX swap pools were named such because they'd be like a really good use case for trading. Basically, like you don't use it if like the pool itself is the primary source of liquidity, but if it's something big and maybe less volatile than Bitcoin in most cases, or around that level of volatility, like you wouldn't use it for meme coins, but it's perfect for like trading currency pairs. But it kind of depends on there being stable coins in non-USD denomination. And traditionally, like that's been the stopper, is there has yet to be stable coins outside USD that get significant traction. And maybe this will be the cycle that it happens. DeFi Cheetah, though, posted a really interesting article with a headline. It's not no one wants non-USD stables. It's that no banks want non-USD inventory. And which is, I thought, a pretty interesting perspective on it. So I don't know. Like, we'll see what happens.
I just look at it as another asset. And there's no reason why you can't have like it's about liquidity and depth. Like this is one of the things that we want to bring to the market too, because we have like 200 million of potential PMUSD supply to function with. So deep liquidity provides tighter spreads. So better pricing attracts more volume. More volume attracts more fees. And again, I think there's a diversification element to having your assets priced in different currencies. And you can introduce the hedging, like it's another thing that is, needs to get bigger, like hedging and stuff. You just need, again, you need the liquidity and you need deep enough liquidity. It is why yield basis is really successful, because if you want to trade Bitcoin in size, it's going to have to hit those pools, right?
Yeah, and it's actually been pretty phenomenal to watch that trading volume, like as it has rolled through yield basis pools, as well as even just the yields that are accruing to these pools using this mechanism here. Let me just take a quick look at the. I'm just going to
I
pull
think
this
I
up.
saw 120K in the last 28 hours.
It's wild. It is wild. So here's the base VAPYs for CBBTC, WBTC, and TBTC between 20% to 37%, which is there's no rewards, no incentives in the pool. That's just the native trading fees because of this kind of interesting novel FX swap mechanism. I know you were talking about a bit before the show about yield basis and saying you're really excited to talk about yield basis and the effect of yield basis on the Curve ecosystem. What's your take there?
Yeah, no, I think it's this whole notion of like having deep liquidity. So you provide deep enough pool liquidity, then you attract better pricing. It lets the flow, like this is all about flow, like velocity, and you can see it happening. If trades need to go, they get routed, whether it's proactively being done by some individual or by one of these like automated market making bots or processes, right? So, I mean, if you want to think around the campfire, you could just replace that with gold. So there's no reason why you couldn't build a deep pool of liquidity with gold. And again, PMUSD has supply to support that, and other, like I would love to pair up with some FX, like foreign exchange pairs, and get some deep pools. I mean, nothing's set in stone, but I'm optimistic about foreign exchange curve cap, and the yield basis concept is really interesting because it takes like a Pareto's law approach, like an 80-20, where the core vessel is the main trading pair, and then it has this auxiliary bucket to fill it up or rebalance when the pairs are offside. And that's really intelligent. I mean, you've seen that in traditional finance portfolio construction, and it runs in the whole 80-20 Pareto's law kind of math. There's math behind that, and so no, I think it's really smart, and it's showing that it works. I don't know if that helps.
No, it's super, super interesting. Good stuff. Only have a couple of minutes left, and I did want to just do one last story I wanted to highlight because this was featuring the Leviathan community. This is a partnership that we announced this past week between Leviathan and Serene AI to essentially launch the first AI native advertising network with Serene AI X402 on base. A lot of buzzwords in there, so I wanted to just quickly talk through what this actually means and how this actually works. So if you look at the Serene AI website, essentially what they are doing, and there's Leviathan looking nice there, 26 transactions, 26 agents already crawling this little feed that we got here. Essentially what they're doing, though, is we'll pick up the Polymarket one to show like how this works, is they host databases on their site, and they have the capability for agents to kind of run these queries at microtransaction prices. So like you send the agents loose, you give it a budget, you give it your task, and it will like go and like filter through like all the Polymarket data, asking the questions. If it thinks whatever, if it's optimized within the budget, it'll like go through and crawl and like run and all these things and figure it out. So for Leviathan, like this kind of dovetailed with something we were doing anyway, which was we were working on our API, and we were trying to work to add some more like statistical friendly calls into our API. So I'll just move things over to our API. And we were talking with Tarek about it and the possibilities for how like his AI agents could do this. And I was trying to make the point to him that essentially, like, from my understanding of the ad space, like the workflow within like the perspective of ad buyers is still around like trying to like cut out some like chores. But at some point, like many things, we saw coders are like among the first to adopt coding as like very native development. Just outsource your thinking to the AI. I think a lot of industries are going to go that way. So we're pretty soon going to see ad buys where Coca-Cola will just say like, okay, we have to do a $10 million ad spend. Agents, go find the best bang for your buck. And agents will probably be really good at it. There's the old saying in advertising that like half the ad spend is wasted. You just don't know which half. But I think with agents, you could actually just say like, go and figure it out and like run these ads and like micro adjust. And we want Leviathan to be the ad inventory when you get there. So at the same time that we exposed a lot of our ad slots available through the API, we're doing that work anyway. Like Tarek and SereneDB comes to us with this whole concept, and we said, well, sure, here's the endpoint. So you can now actually use our API to query the performance of any given ad that you're running through Leviathan, or also like purchase ad slots via X402 micropayments. It can happen natively. The only thing that humans are involved with is approval of the creatives. But because the Leviathan newsroom is manned pretty much 24/7, you can get that kind of anytime. So, and then part of this is we also released this idea of like getting per article stats, which is something that's like we just long needed to do for quite some time. Because obviously, I'll just go ahead and run a demo of this while we are talking here. Like, you guys won the Squid Pass for the past week, but no one until now like knows what does that actually mean. What's the 22588? But Leviathan is, and we're going to release an article on this next week, like doing really competitive with all the major crypto media. But no one knows this because we haven't been telling the story. So we tend to like, you got 1,289 total impressions for this. Total clicks 49 for a 3.8% click-through rate. 500 of those impressions coming from our website, 531 via Telegram, 74 via X, 53 impressions through the Squid Digest, 26 click the QR code. Unknown sources also accounted for another 105 impressions and 4 clicks. So, thank you for bidding in the auction. And it was $30 to drive all this amazing activity.
It's really cool stuff, man.
Using Leviathan.
Yeah, that's really cool stuff. Yeah, like I said, we have it as the main news source coming into our Discord.
Yeah.
So
that's
absolutely.
What we like to hear.
Yeah. And we run quizzes every week. It's ironic because we offer a reward. So it's like, hey, we're going to teach you, we're going to pay you to learn a little bit.
It's good. Would definitely be interested in hearing your feedback on the Discord, because we're doing some X optimization, but Discord's the next channel in the pipeline after that. We'd like to get, we have kind of the Discord bot, but we haven't updated it in some time. So we're going to like try and like get that more modernized and having some of the nice bells and whistles that the Telegram bot has, for instance. Right buttons on. To click on, right? People want buttons.
Solid.
Excellent. MD, really appreciate you taking the time to join us here. Anything at all that you wanted to talk about while we had the have you here?
No, man, you've given us a ton of airtime, and I appreciate you bringing us on. And until the next time.
That's right, Squids. Until the next tide. So I believe the next tide, the next Llama Party, if we have one, will be the day after Christmas. So Merry Christmas to all the Squids that celebrate, and a Merry Anti-Christmas for those who are Christmas Grinches for whatever reason. I expect I'll be around, but nothing's certain in DeFi. So we will see. Hopefully I'll be able to party with you guys next week. All right, Squids. Merry Christmas.
Thank you.